Hello traders, hope you're doing well. Now if you're trading regularly or you watch a lot of videos or news related to stock market, then it is very common that you would have heard people say today the market opened in gap up or today the market opened in gap down, right? A lot of people think there are only two types of gap which can be formed in the market. But did you know apart from gap up or gap down, there are five more different types of gap which regularly forms in the market. And most of the traders don't even understand the importance of these gaps. Having a proper knowledge about gap and understanding the difference between each type of gap will help you a lot when you read charts or when you are implementing a strategy. So today, let us understand what is a gap and what are the different types of gaps. Traders, I'm making this video only because this topic is very important. So please pay complete focus and attention. Now first let us understand what is a gap with an example. Imagine that this is the previous day candle and this is today's candle. If you watch these two candles closely, we have a small range here, right? Where the market skipped these price levels and there was no trade which happened in this area. So this area is called as gap. Now in this daily time frame chart of Nifty, there are so many gaps like this. Can you identify them? See, there is a gap here. There is one more here. This is a gap. This, and this. You can just go and check the recent chart of Nifty and Bank Nifty. You will be able to find so many gaps like this, especially from the last 2 months. Now looking at a chart and finding gaps is very easy. But the mistake which a lot of people do is they think all the gaps are one and the same. I don't want you to make this mistake. Now by the end of this video, you will understand that all gaps are not one and the same, and from the next time you see a gap, you will be able to easily identify the type of gap which is formed on the chart. Traders, in total, there are 7 different type of gaps which can be formed. In this, the most common type is gap up and gap down. Apart from this, we have common gap, breakaway gap, continuation gap, exhaustion gap, and finally island gap. Now let us understand the difference between all of these gaps one by one. Okay? Now traders, let us see what is gap up and how do we identify this on a chart. Now if you look at this chart, this is our previous day close and next day the market opened at this level. Now the biggest mistake which a lot of people do is they consider this as a gap up. Now just because there is a gap here between the previous day close and the next day open, we cannot consider this as gap up. Now how many of you have been doing this mistake? Are you considering this as gap up? If yes, then it is wrong. We consider as a gap up only when price opens above the high of previous day. So this is previous day. What is the high of previous day? This level, right? I'll mark this level only when the next day candle, which is this, it opens above the high of previous day level. Let's say it opened here and it closed above the previous day high. Only then we consider this as gap up. Now let me take one more example and show you how exactly gap up has to look. Now traders, if you observe this chart, the previous day candle close was here at this level and next day the market opened at this level. Now there is a huge gap between previous day close and the next day open. This is the gap area. Now if you have to consider this as a gap up, it should open above previous day high. So this is previous day close candle. What is previous day high? This level. I'll mark this for you. So this level is previous day high and next day market opened here, which is above previous day high level. Now you can consider this as gap up. The previous chart which you saw, that is not gap up. Alright. Now you would have seen a lot of people building strategy around gap up. Now instead of considering this as a gap up, if you consider the previous chart which I showed as a gap up, then your strategy will not work. So you need to have a clear understanding of what is gap up, what is gap down, and you need to know about the different types of gap. Only then your strategy will work. Okay. Now let's see how to identify gap down. Previous day opened here, the market went down and finally it closed at this level. Now next day the market opened here and it closed at this level. Now from previous day close to next day open, there is a gap here. Can we consider this as gap down? We should not consider. Why? Because the next day candle price should be below the previous day low. So where is previous day low? This is previous day low. I'll mark this level. Now next day when the market opened, the first candle did not break the previous day low level. If it had opened here, then we can consider this as gap down. Now since it did not open below previous day low, this is not a gap down. Now what is gap down? See, previous day opened here, the market went down and it closed here. The next day the market opened at this level. Now for this previous day, what is the low? This is the low, right? Next day market opened here, which is below the previous day low level. So this we can consider as gap down. Now traders, I hope you understood how to identify gap up and gap down. Now let's see the other types of gaps. Traders, the next type of gap is called common gap. What usually happens in common gap is the market will trade within a range. For example, if I mark this level is acting as resistance, and if I mark here, this level is acting as support. Now can you see the market is trading within this range. So when it is trading in this kind of range, there will be some gaps. We have a gap here, we have a gap here, this one is a gap, we have a huge gap, we had it here, one more gap here. So like this, there will be so many gaps which will be formed within a range. So these gaps are called common gaps. Now always remember this, more than 80 to 95% of the time, this common gaps will always get filled. For example, here there was common gap, right? The market did not test this level. It created a gap and it went down. Later it came and tested that price level. Same thing here. Here the market created one gap, but later it tested that price here. A gap was here, it tested that price here. So most of the time common gaps will get filled. So this is our third type of gap. Now traders, the next type of gap is called breakaway gap. So what usually happens in breakaway gap is the market will be respecting a certain level. For example, in this chart, the market respected this level. Again, this level was acting as resistance. Again, the market went down, and fourth time, the market respected this level. So this was an important resistance level. Now after this, just see what happened the next day. There was a huge gap here. After this gap, the market opened in gap up and it started moving the upside. Usually what happens is the market will continue to move in the same direction, or it will go little higher, come down and take support here, and then it will start moving towards the upside. But usually what happens in breakaway gap is after this breakout, the continuation will be towards the one direction. So these type of gaps is called breakaway gap. Traders, the next type of gap is called continuation gap. Now what happens in continuation gap is the market will already be in a very nice trend. You can see here the market is in uptrend. Now when it's going in an uptrend, it will create a small gap like this, and then it will continue its momentum towards the upside. Again it will create a gap like this. Again it will continue the momentum. Again there is a gap. So continuously 2 or 3 days it will open in a gap up and it will continue the momentum. This type of gap is called continuation gap. Now those who understand how to trade in price action and you want to do swing trading where you hold the position for more than 2-3 days continuously, when market is in a trend like this, after a bullish momentum like this, if you hold the position until the next day open, you can make good profits here. Again, after a good nice candle for the whole day, bullish movement, if you hold the position till the next day, you got a good gap up momentum. Okay, so this is about continuation gap. The next type of gap is called exhaustion gap. So what happens in exhaustion gap is the market will be in a very nice trend. If you see here, the market was in very good uptrend. After a point of time, at a certain level, the market will start facing rejection. If I mark this level, the market rejected from here and it started moving towards the downside. So this level became an important resistance level. Now after this fall, again the market will try to go up. At this time, the expectation of traders will be that the market will go reach this level for the second time. Now when the market is going towards the upside, it will form very good candles like this, bullish candles. But when it is about to reach this level, it will create a gap and it will form very good candles where it makes people feel that this is going to be a very strong move. But what will happen is, without reaching this level or not even touching this resistance level, the market all of a sudden it will go completely down. Now this fall will be a very big fall. Can you see how low the market went? That means the buyer's pressure is over. The buyers are no more interested at this level and there was a huge sell-off. The price completely went down. So this kind of gap is called exhaustion gap. It created a gap here, making everybody believe it will go high, but without going, it exhausted and it went down. Now the last and final type of gap is called island gap. Now what happens here is, the market will be in a downtrend and the next day the market will open in gap down, and for the entire day the market will be trading within a small range. The immediate next day the market will open in gap up and then it will start continuing its momentum. Now if you observe closely, this area, it seems like it does not have any kind of relationship between this price movement and this price movement. It is trading in its own range. So this kind of gap is called as island gap. Usually island gap is considered as a reversal pattern, but just looking at this kind of movement for that particular day, we should not consider it as reversal. Rather, we can consider this candle's low as a very strong support level, which I have marked here. Traders, now in total we have discussed about 7 different type of gap. Now next time when you analyze the chart, if you are able to identify the correct type of gap, you will be able to find better trading opportunities in the market. I highly recommend you watch this video more than once and get a better understanding about different type of gap. Each and every type of gap which we have discussed today are very important. It will help you to understand the current market sentiment. I personally have built 2 to 3 gap up and gap down strategies which I have shared in our 60-day challenge program. You can enroll to this program if you wish. Now it takes a lot of time to create such content for you. If you enjoyed our content, don't forget to like and subscribe to our channel. Now traders, that's all for this video. I will see you in the next one.